Good morning, ladies and gentlemen. Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Friday, September 29th, 6:05 a.m. here in sunny Northern California. Hope you all are well. Thought I would just check in with you this morning and talk about a couple of things. This is going to be quick. First and foremost, let's start by saying this is not financial advice, not a financial advisor. However, these are my perspectives on what is happening in these here charts. I try to be unbiased. I try to be honest. And the only question I'm trying to ask is, what does the chart tell us? And I find that if we can stick to what the chart is telling us, we do pretty good. Let me start by saying that over here in the Cryptogenic community in Patreon, got some members that have asked for some TAs of some charts: Theta, T-Fuel, DGB, BCH, DOT, Cake, Ethereum, BTC, XDC, Fort, and Volt. Shout out to the members of my Patreon community. I'm going to be hitting up these charts within the next few hours this morning and throwing these charts onto the Patreon wall. But for this morning's purposes, I want to take a look at what's happening over here with XRP. And if we have time, we're going to look at BTC as well. So, if you haven't noticed, we've gotten a little bit of traction here with XRP. And what does that traction mean, and what can we expect for what's happening next with XRP? First and foremost, let's start with this 4-hour chart, because on this 4-hour chart, we can see very clearly that, bam, look at that. Just in the last 4 hours, this very candle, while you were sleeping, this very candle saw a 7.38% pop. And if you go back to, I guess, yesterday morning, yesterday morning, it's about 11%. If we drop this on the 1-hour chart, we get an even more clear picture of what's happening here. Now, the first thing I'll say is, okay, as exciting as this is, look at the RSI. The RSI is severely overbought. Now, when the RSI is overbought, what does that mean? Well, the primary thing it means is that the supply has been exhausted. So there's very little supply left. So when you see exhausted RSI like this, you do not expect it to explode to the next level up. The RSI needs to make its way down again. And as the RSI makes its way down, the supply is refreshed. So liquidity has to be created in order for any asset to break out to the next level. And liquidity creation, you can see liquidity being created as the RSI makes its way down. So when the RSI gets to the bottom like this, that's a clear sign that there's now liquidity for buyers to press the price to the next level. Okay? And so without liquidity, there can be no breakouts. So the first thing I look for is overbought or oversold on the 1-hour chart. Then I go to the 4-hour chart for confirmation, because it's going to happen on the 1-hour chart first. Then it's going to be confirmed on the 4-hour chart. And sure enough, on the 4-hour chart here, we are overbought. Okay, so in other words, even on the 4-hour chart, the 4-hour chart testifies. And look at the pullback. I mean, we hit this premium zone here at almost 55 cents. And now we've pulled all the way back down to 53.5 cents. And that's telling me that the market is beginning to retrace so that more liquidity can be created for the next move up. Now, the question is, how long is that going to take, and how soon can we expect the next pump? Well, that depends. So when you watch a pullback transpiring, what I like to do is juxtapose the movement in the RSI against the movement in the price. So if the movement in the price happens quickly, but the movement in the RSI happens slowly, what that tells me is that if the price is moving down faster than the RSI is moving down, that tells me that we could be moving to a downtrend instead of just creating liquidity to continue to the uptrend. But if the RSI is moving down faster than the price, maybe the price is moving sideways, but the RSI is moving down rapidly, that demonstrates that liquidity is being created for the next move up. Now, when I looked at this kind of channel right here, I was looking at a measured objective for the breakdown of this channel that could take us down I drew this line here because I drew it before, just anticipating, it's pretty arbitrary when you draw these lines and there hasn't been a breakdown yet, hasn't been a confirmed breakdown yet. And now what it's looking like is I should have drawn the line more like this. Right? So based on this channel, the measured objective for the breakdown of this channel would have taken us down to about 48 cents. However, this move up invalidates that because we basically broke back up into this channel and then got rejected, okay? So we basically broke back up into that channel and got rejected. Now we're breaking down from it. But notice this order block here. We have short orders waiting here. Okay. Now, whenever you see a volumetric order block like this, a bearish volumetric order block, that means there's money waiting here. And whenever you see money waiting in any place in a volumetric order block, that means that there are people who have a vested interest in getting the price back to this level so they could short it. So a lot of times, we tend to try to divide the market between the bulls and the bears. And we think that the bulls want to pump the market and the bears want to short the market. And we don't realize that, yes, that's true, but bulls short and bears long. And if you're a bear and you've got money here waiting to short, it's in your best interest to buy it here in order to pump it up to that level. In other words, you see a volumetric order block here, you'll help the bulls get it to this place so that you can short the crap out of it when it gets here. And notice that the RSI is down at the bottom when it's down into this bullish order block, right? And so there's supply that's been created. Well, you want to help exhaust that supply, absorb that supply, so that you can tank it. So with that being said, just looking at the order blocks, I would expect to see something like this, something that comes down back, that really tries to bottom out this order block. The very next thing that they want to do is take out this order block. And so what we might kind of see some doing is kind of bouncing around between these two order blocks. So let's say, this is purely arbitrary. And the reason I did it that way is because notice on the 4-hour, there's more bullish order blocks than there is bearish. And when I see this tells a story, and the story that it tells me is there's more bullish interest in XRP than there is bearish on the 4-hour, okay? So that should be encouraging to us. By the way, is anybody there? Anybody with me this morning? If you're there, drop me a line. I don't know if my chat, there you are, Crypto Musician. Crypto Musician, we going up all day, or is this just a pre-party pump? I would have to say I think it's probably a pre-party pump. And I hate to be a party pooper, but I can't say that this thing has long legs at the moment. I do think that this is going to, it's going to break out, just as I said, but it's going to take some time here. Now, if we go to the daily chart here, we're seeing the same story here. We've got this huge bullish volumetric order block, and then we've got this huge bearish volumetric order block, but the bullish one is a little bit bigger than the bearish one, right? And we just hit the top of this order block on the daily, and that could probably take us back down to the bottom. So we'll see some kind of consolidation between these two order blocks until one of them is consumed, and then we could move higher up towards the equilibrium. So if I were buying XRP, my strategy would be to buy it at the bottom of this, as close to the bottom of this order block as possible, around the 45, 46 cent mark. And then I can ride it all the way up to about the 65 cent mark, 65, 66 cents, and even all the way up to 73, 74 cents. Now, notice there's more bearishness up here than there is bullishness down here. But once we exceed this level here and hit this area, it'll be interesting to see whether this order block turns into a bullish order block, which is what I anticipate, right? And then we'll basically see some consolidation between this level, these two levels, until we're able to penetrate and move higher. So that's what I see with XRP. However, when we pull out on the weekly, there's another story here. When we pull out on the weekly, this is a little bit concerning because this is an ascending, narrowing wedge, which most of the time is bearish. We could also draw it like this, and it's more of an ascending channel, which is also bearish. And so what we could easily do is something like this. Now, you all know that I have been anticipating a breakdown across the crypto market. And so kind of when I see patterns like this, what is this? Takes us up to 61, 62 cents. What that basically, the story that this kind of tells me is it can take us up into this order block here and then take us down all the way back down to this area here, right? That's the possibility. We could even kind of break above and go up into this order block here, right? So what this is showing me is the potential for a strongly bullish move that suddenly becomes a breakdown or a bearish move. And I've been anticipating that on the Bitcoin price chart for some time now. And I've been talking about this, that if you kind of look at this trajectory, there's a lot of money waiting down here at $16,000. A lot of money waiting down here at $16,000. And so I've been anticipating a breakdown to the $16,000 level and then a breakout. And this is where the next bull market begins. This is where the actual breakout happens. Now we can see a path on the daily chart that would take us back down to 20,000, right? Because just looking at these volumetric order blocks in conjunction with this trend, right? The breakdown of this trend, the measured objective, takes us down to 20,000, okay? So, we'll have to just kind of look at this. On the weekly chart, actually, I had a 3-day chart. Where's my 3-day chart? Here it is. Right. So on the 3-day chart, take a look at this. The breakdown from this huge ascending narrowing wedge, the measured move takes us all the way down to 18,000. Right? So, I mean, when you look at this broader pattern here, this is an ascending narrowing wedge, and we just broke down from it. Right? So, and then we had an ascending narrowing wedge. Well, no, it is kind of an ascending narrowing wedge in the RSI, but you had this huge bearish divergence in the RSI over here. I mean, look at these strongly higher highs and lower highs over here. The bearish divergence is from it's from January 19th all the way to July 12th. and we finally start the downtrend here. So this is a downtrend that will continue for some time. This is not going to be like a couple week or, couple month downtrend. Look how long the bearish divergence on this 3-day chart telegraphed a coming downtrend. So this is going to take us through the end of the year. I think between now and the end of the year, we're going to continue to trend downward until we have the final capitulation down to this level here at 16,000. And then maybe turn of the year, beginning of next year, whenever it happens, the new bull market is upon us. The new bull market. And what that's going to do is it's going to exhaust all of the resistances. It's going to take out all of these bearish order blocks, all of the volumetric bearish order blocks that stand in the way. It's going to clear the skies. The resistance is going to be removed. Boom, that final capitulation, and then all of this money is going to be waiting down here to just bam. And that's where we're going to be surprised by how quickly the market takes off after that final capitulation. So that's my perspective. That's what I see. That's what I think. A lot of people don't agree, and that's totally fine. Nobody has a crystal ball. Nobody has a crystal ball. And, when I see technical analysts that are super confident, you either haven't been in this market very long or you're just pretending to be super confident, because nobody has a crystal ball. Nobody has a crystal ball. We're simply looking at the indicators and the charts and doing our best to make sense of them. But this has been my perspective for quite some time, and so far it's been fairly accurate. Looking at the moves, I was expecting to hit resistance at 30,000. We did. I was expecting a retrace to 24,000. We did. I was expecting another breakout towards 32,000. We almost hit 32,000, and then I was expecting the breakdown to begin, and we broke down from that ascending narrowing wedge. The last piece of my expectation that we haven't seen yet is a breakdown to $16,000. If that happens, we're going to see the whole crypto market capitulate to that level, and that will be the best thing for the market, because there's going to be plenty of money waiting down there, not only for Bitcoin, but for the altcoins as well. And that's going to be the beginning of an incredible bull run that's going to take us 3 to 4 years to get to the top of. So with that being said, remember, as I said before, this is not financial advice. I'm not a financial advisor, but I thank you for watching. I thank you for listening today. Also, check out my Patreon, patreon.com/cryptogenic. Dropping charts there in the next several hours today. Dropping a bunch of charts there for my patrons, and would love to share them with you as well. All right. Have a wonderful day. Remember, everything that I do here is designed to empower you to sleep in peace at night, wake in joy every day, and walk in love. Wake in joy every morning and walk in love every day. With that being said, this is Cryptogenic signing out.